We have a small change in our schedule. We will be moving directly to our final panel discussion because our moderator, Mr. Pran, has a flight to catch. So we have just shifted it around a bit. I now request, so our final panel discussion is on the topic of government policies. And I invite our esteemed moderator, Mr. Pranbihanga Borpuzari, Associate Editor, ET.com, The Economic Times, and our panelists, Dr. Vinod Chopra, Managing Director, Sai Industries Alliances, and Mr. Samir Kanabar, Partner Director, Tax, Ernst Young, to kindly join us on the dais. Thank you.
Is this on? Great. So let's get started, given the paucity of time. Uh, since we're just about a week into the budget, and Samir here has already been talking about budget at multiple forums. So, Samir, let's start with you. Just give us very briefly, what do you think are the hits and misses from budget this year?
Sure. So, uh, obviously, we were just discussing the fine print, and actually, the devil lies in detail, as they say. But at least I would say there were two, three major hits or misses rather. One was essentially not extending the manufacturing tax holiday, which is entitled to 17% tax regime, a lower tax regime beyond 2024. So 2024 is the final sunset date by which people have to start manufacturing. If you don't, then you don't get that. And there was a lot of expectations around that. Second is from MSME perspective, there are a lot of entities which operate as limited liability partnerships. So we call it as LLPs. So LLPs are today even, like individuals taxed on a there is a discrimination, so they get taxed at the highest rate of 34%, whereas normal corporate tax rate is 25%. So we were expecting some balancing act to see that if that rate could have been brought down, but that's not what has happened. And third, again, the LLPs are not entitled to this manufacturing regime of 17%. So we were expecting like cooperative society, they have embedded. So if cooperative society can be entitled to 17%, why not, partnerships? So these are the three major misses, I would say.
Is it that the government is trying to push something like a one-person company more instead of an LLP, or do you think it's like a genuine oversight?
No, so again, more from MSME perspective, LLP is much liberal regime as compared to corporate law. Corporate law is such a huge law, and everything is written, so you have to follow the Bible. Whereas LLP is a self-governed law. So it gives you a lot of flexibility, a lot of freedom to decide what you want to do, and you can choose. So that's why people prefer to be in an LLP. However, in an LLP, normally what happens is that if you are a partner, then whatever profit you get from an LLP is tax-free in your hands. So final tax is in the hands of LLP, unlike in a company where company also pays tax and shareholder also pays tax. So that's why the rate is a bit higher there, but still a balancing is required.
Right. Now, Vinod, if I can come to you, what do you think are the hits and misses from the budget?
So one thing is good in this budget is about the extension of the emergency credit line for at least a year more. We have been from our chamber lobbying very hard those days, and I think went through, and the RBI commended at that time as well to our president those days. In fact, the other main thing was the CGT SME has been revamped. So there is a 9,000 crore infusion in the CGT SME. With this infusion of 9,000 crore, what is going to happen is that an extension of 1,40,000 crore lending will be, supported by the bankers and the lenders, because the guarantee would be for 9,000 crores equivalent to that amount. So perhaps this is one good move actually, because CGTSME has been recently popularized more by bankers. Earlier, not much. So initially there was a lot of hitch, but now it's come into a hybrid model. Earlier, if you do not have a collateral, only then the CGTSME was availed. But now, if you have a collateral and plus you need CGTSME, so you get an extended 2 crores on the collateral amount of whatever you have. Without collateral, a 2 crore more extension is given by the bankers. So this is the hybrid scheme, which again, last year we pushed through the RBI from the high power committee here. And it went successfully on. So the one more hits I would like to share this time is the tax audit limit has been increased from 5 crore to 10 crore in this budget. And the startup policy also has been increased by about one more year. And we hope it goes on for one more year, because the startup has registered a lot in terms of lots of patents have happened in the country. So intellectual properties have gone up. So I believe this is a good move, recognizing startups. And most of the startups are MSMEs. So perhaps this is a good move.
Nothing on the misses?
I think Mrs. Samir has taken care. I feel that there is one more hit I would say is about, in case of MSME payment, what has happened is that the government this time has come out with a policy where if actually the payment is made to the MSME, then it can be allowed as a deduction. Earlier, the invoices were booked, and if you don't make the payment, I mean, you can still take the deduction, and you have to just pay a compliance of, the audit report would just mention that these are the balance of MSMEs in your outstanding. But now, if the actual payment has made, only then the eligibility of deduction is possible. That is a good move. But still, in Mrs. part, there's a lot more to do in terms of lending by the bankers. Lots of bankers are still not very keen in lending money to startups. They want at least 3 years balance sheet and all those kind of things still on. So, but in terms of the other thing is that there has to be a mandate in some policy by the government in terms of lending capital finance to the MSMEs at a very liberal way, where rightly before this panel discussion, it was discussed that they are not they're the least risk. The MSME themselves are, their collaterals may be their residence or perhaps their own property which they have. So I believe risk level is very low. Nobody would really like to go into that kind of a modality like what large companies have NCLT as a shelter house for them. So that's the message I would believe.
Yeah.
But and maybe what we can do, what I'm trying to, maybe intending to cover in my presentation, I can also try to cover it here. In terms of a couple of other good points from MSME perspective is Vivad Se Vishwas scheme for MSMEs. So there are two schemes. One scheme allows you those MSMEs who were sort of having contracts between 2020 and February 2020 and March 2022, and they are registered under the MSME Act. Then whatever performance security or any other amounts which were withheld, 95% of those would be surrendered back by the government or by the entities which have withheld it, which is a very welcome move. And second, Vivad Se Vishwas scheme is which we saw today also, is around 1 trillion rupees is going to be released by the government, where you are in arbitration for the pandemic period during the lockdown. Those cases will be settled and resolved, and up to 1 trillion funds will be released. So these are two important hits also, which are very welcome move.
I think around all the optimism, I think the there is one part which really affects a lot of MSMEs, and we have written a lot about it in the ET, is around the ease of doing business. And our good friend at Team Lee's Rishi Agarwal had dug up some information, and it's pretty stark. One caveat that these are 2021 figures, but nonetheless, I don't think they've changed much. There are 26,134 compliances with provisions for imprisonment under 843 legislations, rules, and regulations that oversee businesses today. Uh, that means 2 out of every 5 clauses in these businesses affect you, and you can basically go to jail. So there are 26,000 ways you can go to jail, and some of them are pretty absurd. Uh, for example, there is a 1 year to 3 year imprisonment term for not lime washing the inside walls of your canteen kitchen once in every 4 months under the Factories Act. This was the 2021, so I don't think that's a change. There is again a 1 to 3 year imprisonment for the toilets should bear the sign of men or women under the Factories Act 1948 and related rules. So there are lots of other rules like that. Uh, what is happening around ease of doing business? Dr. Vinod, if you can come in.
So, on a lighter note, yes, there are a lot of hiccups actually from time without beginning. And the days were earlier, transformation has happened, things have changed. Post-COVID, a lot of people have understood the nitty-gritties, even the government have realized a lot of things. We are today on a hybrid mode of this webinar, where people are watching at home, in office, and live here. So perhaps a lot of things have changed. In terms of ease of doing business also, there is a high power committee which is working on a lot of reform suggestions to the government. So they are reducing on compliances. In this budget, I would share that there are about 460 custom duty, which has been is being streamlining, and they are removing it literally, or exemptions are being created for that. And this will directly benefit MSME because they are the importers of those raw material, particularly for handicrafts, for other materials like what they need. And the registration format of for MSMEs have been, has come as one single point of registration, which the government has been, earlier government also has been saying it for last 20 years. But this time, in the last 3 years, the Udyam registration has been robust. So if you just flash your Udyam registration to any government buyer, for example, GEM or anywhere, it is self-certified and it is enough. You don't need any further registration for your factory manufacturing or for your service providing. So these kind of ease of doing business at a macro level has happened. But what rightly said, at micro level, things are yet to happen.
Right. Samir, if I can come to you, another area where ease of doing business we had all hoped was GST. And in 2017, when we were doing a lot of conferences across the country around GST, of course, there was a lot of confusion there. Sadly, there is still a bit of confusion around GST now. Stuff like revising incorrect reporting in your returns that is still limited and inadequate. What's happening around GST? What's your feel?
So, and then again, at least in terms of prosecution and all, of course, we did, FM did make a reference to say that around 3,000 odd violations have been decriminalized. So, of course, there may be, under different legislation. So, we may see few in legislation A, B, C, D, and they may not be cumulatively used. But if you add them, yes, they are almost 3,600. So that's really welcome, and we have been seeing this under Companies Act and even under GST, various violations are being decriminalized. So that's a welcome move. But coming back to again aspect to GST, so there are a couple of things again. There are a lot of improvisations which are happening from GST and network perspective. So more or less now the network is being aligned with the law. So for example, if you have to claim input tax credit, and if that credit has to be claimed within, say, a period of 1 year, and if you don't claim it, then obviously the system itself will sort of, black it out and you will not be able to claim it. So again, these are improvisations which are facilitating people to understand that, okay, if something is blacked out clearly under the law, it is not available. Otherwise, normally somebody would have claimed it and would have been penalized and paid interest. So there are a lot of improvisations which are happening within the GST from ease of doing. Yes, but there is much more to do, given that now we are more governed by the GST Council, which comprises of states and central government, and then of course everybody has to have a consensus view for a particular aspect to pass on. So it takes its own time, but at least there is a lot of efficiency out there, and we see a lot of interaction between GST Council or commissioners who act as a bridge between the industry and the council, and thereby they try to take industry problems to the council and try to resolve them. So there are improvisations. Yes, it is going at uh, a particular pace. Maybe that pace needs to be fastened up. Yeah.
Right. So I just wish, all the 3,000 changes that happens, goes up on one portal somewhere, because there are some other numbers, in a normal year around 3,000 to 3,500 changes take place in the regulatory environment every year. 2020 was an exception. There were some 4,880 changes to the regulations. Where do you find them? On 2,233 websites of center, state, and local bodies. How do you do that? Go to the website, browse through them, go through the relevant sections, go through MySMART pages, and then try and figure out what those changes were. So not all that easy. Anyway, so getting on to another topic. Uh, how many of you are on GEM? Anyone GEM? The government e-marketplace? Okay, great. So makes my life easier. Dr. Vinod, what's happening with GEM? I mean, we've been talking about GEM so much. The economic survey also this time talked about GEM and getting closer to Amazon and Flipkart. What's the update with GEM?
GEM actually is the Amazon and Flipkart for government. In fact, on the same lines, what Government of India has done is they have scrapped DGSND altogether, the rate contract system, traditionally conventional system earlier. And they have come up with a very open platform of government e-marketplace, GEM. In this, basically, there is a lot of advantages for buyers and sellers both. It's a very transparent, absolute digital platform, wherein on this platform, currently I would say about 50 lakh sellers have registered, and more than I think 62,000, if I'm correct, 62,000 buyers, government buyers are registered on this. There's a huge transaction taking place on GEM. There is lots of modes of purchases. There is a direct purchase, there is a tender purchase, there is a reverse auction process on GEM, and perhaps your products are listed on GEM with photographs as if it's just like Amazon and Flipkart or other modern trade. So perhaps there are a lot of new improvements done. It has its own pros and cons because NIC has been really working hard. Currently we are on GEM 4.0 model, where the latest even services have been included. Like even the catering service, security service, AMCs, all have now come on GEM.
Anything to change? I mean, since you're on GEM, what are the kind of changes that you would want?
So, well, there is a lot of automatic system where, there's no manual intervention in terms of suspending a buyer or a seller if the seller has delayed the material or may not be able to, comply. So without, sometimes it happens without even a hearing, and it's because it's an auto software, so it automatically, suspends the buyer for a month, which is inviting some litigations. There was a case in Delhi High Court by one of the buyers who was wrongly suspended, and he was immediately revoked. So there needs to be some contemporary modality in terms of handling conflicts between the buyers and sellers, because normally we have seen in GEM, they leave the conflicts between the buyers and the sellers. The GEM says that we are only a platform, we are not here to resolve any conflict. So it is between you, buyer, and the seller, please handle it. So here what happens is the entire digital format of that portal, the essence is lost, because the seller can't go to a buyer who is, suppose the seller is in Manipur and the buyer is in Tamil Nadu. So it will be very difficult for the seller and the buyer to meet each other and resolve a conflict. So this is one hiccup. The other hiccup is delayed of payments. The major issue is delayed of payment, because the payment is getting delayed by many government bodies nowadays, and there is no mechanism to help the MSME sellers to really bring that. There is an MSME Samadhan, so they have to file a case again. Those all things are there. But I think GEM should make some punitive action against the buyers as well. So that will bring a lot of kind of control on delayed payments.
Right. Sabir, if I can come to you on a different topic. Last week we heard the FM talk about, and Vinod had also talked about it, rationalizing the customs rate in order to, promote Make in India. What do you think will be the impact, changes that we need to make, especially regarding, custom duties? I mean, outside the purview of budget, what do you think we need to do?
So yeah, I mean, of course, as you rightly said, FM has attempted to reduce customs duties, and more again to accommodate the new age requirement for whether it is green technology, or sorry, whether it is green energy, or whether it is new age technology, or whether it is EVs. So on a need basis or on a specific areas where there is a specific requirement to promote India as a manufacturing hub, and where we may still not have enough localization, and where we are still dependent on importing, while the localization may take some time. We have to promote the exports and be more competitive. So to do that, most of these duties or custom duties which have been reduced are largely going to contribute to the export sector, and not sort of harm the domestic sector or the domestic manufacturing, and then accordingly make India more competitive in the global markets, so that we are able to produce better outcome. We are able to use better imported stuff, which today we are not able to manufacture. Say we may have to meet the requirement of Apple to have specific parts, which we may have only 70-80% capability to do it locally, but we may still have to import 20-30%. So we should be able to import that, embed it, and then export it. So that is where I think the thought process is of the government, and in that direction, the custom duties are being sort of levied on a selective basis, on a rationalized basis. And of course, there are a lot of FTAs which we are talking about, whether it is Australia, UK, UAE. These FTAs are also going to play a very larger role to develop the Indian markets as a manufacturing, and also allow exports to various these countries. By again, both ways, we are able to import stuff at a lower price, and then we are again able to export it in those markets where the tariffs are lower. So it works both ways. So that's the.
Sabir, if I can stay with you, since we are on the topic of exports, there was also an expectation that there will be some kind of announcement on the development of Enterprise and Services Hub scheme, which was set to replace the SEZ scheme. We haven't seen anything around it, so no roadmap for transition, nothing around it as well. Is that a missed opportunity now?
So what is this scheme? I mean, of course, the intention today was that we have an SEZ, which is Special Economic Zone, and we have another parallel scheme which we call it as MOVER, right? These are the two schemes which are encouraging the manufacturing sector. So SEZ largely cater to exports, whereas MOVER largely caters to the domestic manufacturing. Why SEZ caters to exports? Because it's an export processing zone, so you are allowed to import goods without paying any duty, and then you can export it easily. It makes sense, and of course you have a lot of incentives when you export it. And MOVER is a parallel scheme to SEZ for domestic, whereby you can still import a lot of material without paying duty upfront. You process those goods, and then when you sell it in domestic market, that time you discharge the duty on the raw material, but you still don't pay any duty on your capex. So you would have imported plant which remains in the mover facility till the time you scrap it or dispose it off. You don't pay any duty on that, and only on raw material, and that too on raw material you pay when you process the finished goods and when you sell it. So we have these two parallel schemes which are running, and of course both have their own advantages and disadvantages. For example, in an SEZ, if I want to sell in domestic area, I can sell it, but I have to pay duty on the finished goods, not on the raw material which I imported. Whereas in mover, I have to pay it only duty on the raw material part and not on the finished good. So they are trying to now combine the two and subsume it into SEZ, like how GST has subsumed 14 different taxes into one single tax. So these two schemes are intended to be subsumed into Desh, so that the advantages of both are equally available at large. Now, Desh bill was introduced about a year or couple of years back in the parliament. However, we saw the pandemic, and of course parliament doesn't function the way it is supposed to function. So the bill stays in the parliament, it doesn't get debated. But in the meantime, these two SEZ schemes and mover schemes are serving their own purpose, which effectively, even if Desh is not there, these schemes are working. Obviously, if both are merged and put it into Desh, it would be more better from manufacturing and making Indian manufactured goods being exported much better in the global market. But one has to wait and watch. Hopefully, the Commerce Ministry and the Finance Ministry are the two biggest stakeholders for the Desh scheme. So once there are kind of any differences which can get resolved, hopefully then the bill should move faster, and hope Parliament takes it up on a priority basis.
Last question, Dr. Vinod, would be, staying with the theme of this conversation, what do you think can be some of the government policies that MSMEs can benefit from?
So current one thing has been finely tuned was that 20% mandate has been given. 20% mandatory purchase from MSMEs is compulsory by all PSUs and government bodies. So this is one implementation which is it's worked very well. The other thing what I feel is that there is a big sector which is opened up, the defense sector for MSME. And there is a technology development fund recently adopted and outlaid in this budget also and the previous one. This technology development fund is for those MSMEs who are technocrats and can support the import substitute rather for defense sector. And this TDF is basically a good scheme, has been taken by a lot of manufacturers. Yesterday I was in Chakan, and there is a cluster of MSMEs in Chakan, Pune, where the entire cluster of MSMEs have all together come forward and are supplying to defense in a very big way. So in fact, that the entire cluster is being benefited, and there is a lot of technology development fund they have taken, and they have been supported by the government. So another scheme is, of course, MSME Samadhan. There is one MSME Mart, which is a B2B, again a portal, which is open, not a government purchase, it is open for all MSMEs, and corporates have been trying to search MSMEs from this engine, and it has started rolling out from last October very well. This scheme is also good. We have another international cooperation MSME scheme for technical collaboration or business collaboration. Now this scheme is being promoted by DIPP and Ministry of Commerce together. And in last interaction with the Ministry of Commerce, they have been very vocal about getting technical collaborations, because there is still an economic or psychological backlash on China for the COVID period. And this backlash is undercurrent, but it is strong. So there is a lot of shift by the Europe markets, by the US markets, and even neighboring countries to start buying from India. So rightly said by the previous panelist here that India is looking at next 2-3 years for 2x to 3x growth, and we are currently leading in the the GDP growth rating, or perhaps the prediction what IMF is doing for us. I think we will surpass that in terms of the kind of demand which is coming up, not only from indigenous. What the government has one more thing done, what they have done is they have, for all government, now they will be buying only make in India. At least it should be 50% or 51% indigenous. Now this scheme has helped a lot of MSMEs get on board to GEM, to MSME Mart, or perhaps to in the tender cycle with the government. So the government is not, if they are available in India, the government is not purchasing imported anymore. So no more global tenders for products which are available in India. So there are a lot of indigenous things which is happening here. And the last is this, the GEM, of course, which we shared. And GEM has helped about, GEM's turnover currently, procurement is crossed more than 1.5 lakh crore and by MSMEs. And it has really been a threshold. Nobody really believed when GEM was rolled out that this will happen. But I think these all government policies have to, there's still a lot of policies to be done. And I believe we have Rajan, Sini, and all of the chamber, Sunil, and to help us to, process for more reforms, so we can suggest to the government new policies, perhaps some tweak in the policy, like the MSME Act, which has clause 19 stating that you cannot delay payment after 45 days. But there's no punitive action. So what is the sense of, having an act that you have to pay within 45 days? So we want to really tell the government that, we need to have some punitive action, that if they do not pay within 45 days, then there has to be something done, because the MSME will not survive if this kind of delay happens. So that's... Yeah.
And then just to address that, the finance bill has now introduced that if the payment is not done in 45 days, then the expenditure will not be allowed as a cost to the payer. So irrespective of, and of course there is a lacuna before I come to that. So if any enterprise has a payment to, but it only covers S&M, it doesn't cover the medium one. So it is small and micro, S&M are only covered. So if there is any payment due under the MSME Act, and if it is within 45 days and if it is not done, it will not be allowed as a cost to the payer. It will only be allowed as a cost when it is paid. And also, of course, interest doesn't get allowed. So interest becomes kind of a taxable for the payer. Now, the lacuna in this law which has come in and which needs to be represented by MSME sector is, even a micro enterprise is making payment to another micro, and if they don't make in 45 days, then even in their hands it will get disallowed. So it also disincentivizes the small or micro enterprise. So there has to be an amendment to be brought in the finance bill to say that this should only apply to non-S&M enterprises and not to S&M enterprises. So this is something which has got missed out probably through oversight, and I hope if proper representations are done, at least S&M will get ring-fenced out of it.
Any questions?
No, I just have this question.
Okay.
So I can just ask a question.
Sure, you're audible.
Yeah. So when we talk about this part B that is likely to come, there is one problem. It is one problem that we said, it is M to M also gets discounted. The other problem is if I don't pay within 45 days, but whenever I pay, I take it as an expense, right? So what will typically happen is that people will stop invoicing after Jan, and they will invoice everything after 20th of March. So it goes into the next year. So like you said, if there is no punitive action, this is also not a punitive action actually. Unless we rethink this entire process, bringing in a regulatory reform will not help. This has to be through some other method or mechanism which ensures that payments come on time. If I ask my customer, my vendor to bill, boss, 20 तारीख के पहले bill मत भेज, he will not send. So in my this year's balance sheet is not coming. So I will pay him in September.
Well, I have a point here. See, it will not, many MSMEs don't do this manipulation, basically.
Not MSMEs, large
Even large.
companies.
I'll tell you, I'll share with you. So the point is that if there is no punitive action, the entire process is deformed. The main issue is that even if they pay after 45 days, if they pay after 180 days, then the expenditure is allowed. What punitive action has happened for the delay between 45 days to 180 days is the
Precisely.
question.
Yeah, absolutely.
One. Second thing is that, that during the e-invoicing case, if the e-invoicing has happened, so the MSME, when they go to the Samadhan, for example, so we have a question there that, okay, our evidence under the act is that we have the e-invoice with us. Now, this is one good thing. But if the invoice is not booked by the other side, and there's a dispute, they say, no, we have not booked this invoice. So how come it be of 45 days? How will we? So this dispute is still on. So there has to be a complete control mechanism where a monitoring system has to take place, online, digitally, whatever, by virtue of this e-invoice which has started happening. So if the e-invoice is taken and the ITC input has been accepted by the other side, it should be treated as bill has been booked. The invoice is booked because he has booked the ITC of the input credit of the GST. Once he has taken the GST input credit, the other side cannot deny that the invoice is not booked. So this needs a little look again. Yeah. Yes.
But just optics again, and these are some recent discussions after this amendment, especially where we have been sort of meeting several clients over last 5 days post the budget. And most of them with whom we have sort of highlighted this, that because they are large enterprise, right? So at least largely they have come back to say that, Samir, for us now it will become a Herculean task, because if we don't pay in 45 days and if we delay, we do not have our systems well equipped to monitor and track that what will get disallowed and then when do we have to claim it again, because technologically people are not that advanced to track it, and they say, okay, we may actually miss out claiming this because we know if you have not paid in 45 days, it will get disallowed. I will not get deduction. But when I have to claim it, how am I going to again maintain my systems so that in subsequent year or at relevant point of time I claim it? So why should I take that headache? And let me sort of now comply and not get into this, because the cost is too high to alter my system and bring in all this so that I don't miss out. So these are, of course, so again, it doesn't address 100% of your problem, but to some extent, yes, this is how at least the clients with whom we have been talking, this is what their feedback is. And of course, some of them who are multinationals with whom we have been interacting, they are quite worried that, this gets reported. Now, it will also get reflected in income tax. So somewhere the systems will automatically show, because this data is now digital, right? So it will get immediately reflected in the government systems and everybody will know that yes, these are the enterprises who are actually now not paying within 45 days. So that is also yeah.
Great. I think that's all the time we have today. Thank you so much for joining us. Thank you, speakers. And it was wonderful. Great. Thank you.
Thank you so much, sir. I request Mr. Hemant Taude to please come on stage to present the mementos to our speakers. Thank you so much. Mr. Kanabar, thank you.
Yes, keep coming as it to give some lectures very often.
Sure.
Government changes rules every now and then.
In fact, I was a replacement for somebody.
Dr. Chopra.
Good replacement.
And Mr. Borpuzari, thank you.
He has to first take your photograph.